What's happening with Zillow? Is it really crashing? Should I be concerned? Should I sell my properties? Should I even buy any real estate? Those questions and many more are going to be answered in today's episode, so stay tuned. Hello, everyone, and welcome back to Novarise, your channel for financial education. So today is going to be all about Zillow. What's happening? What's going on? There's a lot of noise. Is the market really crashing because of that? Or should we be paying attention to what's happening to Zillow because it's signaling something that's about to happen and that it might impact us all together, right? So what we're going to do today is just to, quickly analyze a couple of articles that are going to help us sort of like strengthen the case as to what it's going on and why is this relevant for you. Well, it is actually very important because Zillow, it's big on the real estate market, right? And if you're going to learn from somebody, it has to be from the pros, right? Whether it's just their good lessons or their bad lessons, because by learning from their experiences, it's how we're going to prevent any possible mistakes down the line. So it's better them than us losing millions of dollars. Okay. So now, just to give an overview so that we are all on the same page, what happened with Zillow started back in October. And I know a lot of you have been asking me for updates to get my thoughts on it, but I didn't want to quickly jump into the episode in itself because I wanted to gather data. I'm a big data person. And from the articles that I was gathering, even back in October, I realized that whatever was out there was not exactly 100% accurate, meaning there wasn't enough details to the story. There was a lot of guessing, there was a lot of maybes, and this channel isn't about the maybes, it's about facts, right? So I wanted to give it a couple of weeks until I finally gathered the facts, and I did. So I actually read a bunch of articles dating from October 18 all the way to November 11, I believe. And so after reading all of that, that's when I was able to get in essence, the full-blown story for everybody. So the drama started with Zillow announcing that it will stop purchasing houses in the market, right? So up to this point, back in October, a lot of people heard about Zillow buying houses in the market for the very first time because a lot of people were oblivious to it, including myself. Even I didn't know that Zillow was out on and about buying properties. I didn't find out about this until the summer of this year. And then by the time the news broke out in October, I've already known it for some time. But the truth is that Zillow has been buying houses in the market dated all the way since 2018. So maybe they have been doing quietly or maybe didn't gain a lot of traction, but that practice didn't become part of the headlines until recently when this whole debacle hit the news. And everything started because of a TikTok video, right? So a lot of TikTok drama, and it's right here on the screen, as you can see. It all started with a video that actually went viral in TikTok where a realtor was actually talking about a hypothetical case, right? And how hypothetically a large company can actually come in and buy, let's say, 30 houses and then pay below market value for those 30 houses. And for that 31st house, they will pay above market price, because when you pay above the market price for that last one house, you already set a record of a house being paid at the highest price, right? So that sets a precedence for future homes to be sold, and that will give that hypothetical company the ability to charge more money, and that means manipulating the market, right? So obviously when that actually hit the news, there was a lot of opinions going on. So they were the people who just, was easy to just blame Zillow for market manipulation. And there were actually some experts that went on and said, no, if it was that easy, then everybody will be doing it. But as this article shows, why Zillow's pumping the brake on house flipping dated back to October 18, and I will be more than happy to share the links down below so you can actually check out the article yourself. Somewhere around here talks about perception, right? So perception is often more important than reality. So sometimes when the news break out, it's not necessarily about the facts, but it's about what people believe. It's what the perception can be. And the perception in this case was that, hey, Zillow, even though the TikTok video calls out for a hypothetical company, company, a lot of people took it as if the realtor was actually referring to Zillow. Maybe yes, maybe not, who knows? The truth is that the perception was that, hey, Zillow is actually manipulating the market. They are taking advantage of the fact that housing prices have been off the roof and they want a piece of the pie. And so Zillow is actually not the only one out there in the market doing this. There are other competitors out there, and they're Opendoor, OfferPad, and Redfin, and they're all part of what is called the iBuyer program. So what is the iBuyer program? Well, it's actually very simple. An iBuyer program stands for instant buyer, and an instant buyer relies a lot on technology to determine a market-based cash offer. So from my understanding is that it provides homeowners the ability to sell their properties hassle-free. Hassle-free meaning not having to deal with a realtor, not having to pay a commission to a realtor, not having to deal with house showings, because it does consume a lot of your time. And all you had to do was just leverage technology. You will upload some pictures. Zillow or any other competitor will leverage other market data, and then they will just give an offer to the home buyer, and the home buyer will decide yay or nay, I want to buy this property, yes or no, right? So that's in essence what an iBuyer program is. So what happened was that, you know, there was a lot of commotion around why was Zillow doing this if they're into the market, into the picture, buying all these properties and trying to get a piece of the pie. What is it that all of a sudden in November 1st, you'll see an article saying that, hey, Zillow stock is taking a nosedive after an analyst, it's highlighting that 2/3 of their homes are actually bought underwater, in particular in the areas of San Diego and Phoenix, right? And so that actually created a lot of fear as to, you know, people are having flashback, let's say, thinking, oh my God, 2008 is happening all over again and housing prices are going to crash. Zillow knew this and they didn't tell anybody. And because they're the big institutional buyer, now they're going to come in and just, you know, start dumping all of these houses before it's too late. And then a lot of people, you know, fed off that fear thinking that they needed to take action at the time. And because, hey, if Zillow's doing it, that means I should follow suit, right? But that's not really what happened. So even up to this point, there was a lot of uncertainty around the area of, hey, why is it that Zillow is really dumping all those houses and selling them below market value? So some people blame the fact that, hey, there was some labor shortage, as you can see here in this article. So this one was actually published by Fortune magazine. Zillow closes trouble home flipping business amid a decelerating housing market. And this was released on November 2nd. So it talked about how Zillow, once again, starts buying houses in 2018, but how the business was actually doomed from the get-go. And that even though home prices claim a record 19.9% in 2021, Zillow still reported losses, right? And so as you scroll down and you're trying to figure out what truly was happening, you will realize that you'll find answers that refer to, you know, the cost of the homes or maybe labor shortage and stuff like that. But, you know, when you look at the overall picture and you're wondering, well, how is it possible that Zillow is going to have losses when housing prices are climbing at a record 19.9%, right? So why is it that, you know, Zillow has been losing money this whole time and all of a sudden just make money here? And the expectation is that it will continue to go up because if housing prices are going up at a 19.9%, the losses that they reported in Q3 2021 should not be happening. And if you want to take a deeper dive into this, you will see that CoreLogic also sort of like reiterates the story, right? So if you look at this chart right here, you'll see historical prices all dating back from, I believe, from the 1980s all the way to 2021. So you see at the graph here, there was a market correction here. Then the famous market correction back in 2008 and 9 that everybody, you know, can't stop to talk about. And now you will see, you know, fast forwarded to 2020, you will see that prices skyrocketed all the way in 2021. So if that's the scenario, Zillow should be making a lot of money. They should be killing it, right? So what truly is going on, right? So as you are going down, once again, they blame possibly labor shortage, soaring market prices, product delays, lumber going all the way up to 300% of the cost at pre-pandemic levels. And now they're being back down to like 40% ever since. But then it doesn't really tell you the details as to, okay, what's really causing it? So if the housing prices are going up in value, why is it that Zillow cannot nail down, but that their competitors are? Because even when you flip back into this article, it talks about how Zillow stopped buying properties, but then Opendoor, OfferPad, and Redfin, it's buying today. They are continuing to buy. Historically, in the past, if Zillow stopped buying, all the competitors follow suit and everybody stop, and that should give you kind of like a clue as to maybe you should look into something. But now it's a little bit different because Zillow stopped, but then everybody else in that arena, it's continuing to buy houses. So something is wrong with Zillow, or Zillow either sees something that the other competitors are not seeing. But even up to this point in this article, we cannot still tell truly what is going on. The reality is that things are starting to come up as we progress on the dates. And there's actually an article right here that you see that highlights, even though this article was first published in October 2020, it ended up being updated in November 2nd. And it talks about how Zillow is uploading 7,000 homes, once again, raising red flags about the real estate market. So I'm not going to go through all the details, but I do want to call out some issues that they talk about here because it's important, right? And once again, the link to this article is going to be readily available for you to read and look into the details. But in essence, what this article is doing, it further expanded into the facts, right? Like it wanted to truly understand what was happening. So they talk about supply constraints. I mean, no doubt about that. It could have impacted the ability for Zillow to grow or to further expand. Labor, that's also a fact. But then what else? There has to be more than that, because if that was the case, then everybody else wouldn't be doing right. So what is missing here? And, I continue to deep dipper and I wanted to find out more and more. So, okay, I got into the labor and material shortages and all of this stuff. But then as you further scroll down, like you want to find out more. I wanted to find out more. And so what is really happening? So here we find another explanation. So another explanation is home prices. The past year has seen an explosion in home price growth as home buyers seeking more space scramble to compete for the little inventory in the market. We're all pretty familiar about that. If anything, that should help Zillow because the more demand, the more people are willing to pay for the houses, right? But that doesn't seem to be the case. So here, an August report from independent real estate analyst Mike Delpreet found that Zillow, OfferPad, and Opendoor were all paying well above the value of homes to purchase them in 2021, whereas back in 2018, they typically purchased property at a discount. Okay, I get that. Maybe it's because there wasn't any housing available. So let's just continue to go more. So, okay, for iBuyers, margins are very tight, especially once the cost of renovations is factored in. And the longer a company holds onto home, the higher the risk. The activity we saw this summer was so unprecedented relative to the way real estate typically move. I can see why an iBuyer might want to take time to digest the signals coming out of the market now that it seems to have slightly more stable footing. So now we're getting some type of visibility, and it has to do with the fact that real estate, it's really unpredictable, and that maybe they need some time to just sort of like readjust or to pivot again towards a new direction. But, let's continue to dig in to see if we find out more. Well, flipping has not turned into a losing venture on deals that usually take around 6 months to turn around. The trends are showing signs of potentially heading in the other direction, which is likely affecting decision by home flipping businesses around the country. Zillow's other business lines give it an even deeper perspective into the belly of the beast between the real estate portal that buyers use to start their search and their Zillow Premier Agents division. Zillow has a pulse on buyers' demand and the direction of home prices. So some analysts reasoned that the company might not like what it's seeing. It is possible that Zillow is seeing something in their data that maybe on their margin makes them a little bit nervous about holding inventory right now. So when I actually read this part, I became even more curious. So I went on and I downloaded more data, right? So what I did is that I came straight into Zillow's data website for those who are actually curious about finding out. And I downloaded all the housing data that was available in their portal. And these numbers, they date back all the way to, let's see, 2000, right? But what I wanted to see was actually what was happening in 2020, heading towards 21, because apparently, according to the article that we just read, it talked about Zillow possibly not liking what they're seeing with the numbers. But let's see if that's really true. So we have here an average of all the national numbers. And when you take a look at the national numbers right here, it's starting in 2020. And the reason why I wanted to start in 2019 was because right around this time is when you heard about the first case of the pandemic back in China. So I wanted to truly monitor everything from that point on. So we got 247,680, 248,510, yada, yada. And then so as we scroll down, you see an upward trend. So you see housing prices going up. As you will see here on this table, so we have historical data, once again, all the way dating back from 2000. You will go through all the ups and downs and then the crashes. But then once you started going into the 2019 data, you continue to see that the trends, it's going upwards, right? Just like you will see here. Now, I know that some of these numbers might seem unbelievable for you, but just to highlight, remember, these are national numbers. We're talking about all 50 states aggregated in an average. I know for a fact that there are some other markets that are more expensive than others. Just like, for example, as you see here on the screen, we have San Francisco right here, where the prices of the homes went from the millions and yada, yada. So just keep in mind that once again, real estate is very localized. So while in some areas, the prices started going down, in some areas, they started to pick back up. So a great example of this is San Francisco. So it went from 1,129,000 in April of 2020. All of a sudden, you're seeing the average home price in May of 2020 dropping, and then in June it dropped again, only to start picking back up in August. But then if you compare the numbers right here of Detroit, you're going to see the prices going upwards after April. So I just want you to take this with a grain of salt. Again, real estate is very localized, but for the purpose of this episode, what we're doing is taking the overall average of all the housing prices across the nation just to depict an upward trend, which I think we were able to do here with this data. So now back to the article, we talked about, hey, maybe Zillow doesn't like what it's seeing. Well, we just took a look at the data. So based on what we saw, it doesn't indicate that there's going to be a downtrend in housing prices, because the overall trend of the nation is that it continues to go up. So as you scroll down more, then hey, could it be that it has to do with regulatory scrutiny? Maybe that's the reason why Zillow decided to just call it in and decided to not deal with it. I don't know. So let's see. We're back to the TikTok video again, right? So last month, a series of videos of TikTok from a Nevada real estate agent went viral, claiming that Zillow and its competitor were manipulating the housing market. So once again, the claims were quickly disputed by real estate expert. However, Zillow still faces an antitrust lawsuit from tech-based real estate broker Real Estate Exchange, REX, and the Federal Trade Commission reported that they have reopened the case to review Zillow's acquisition of real estate listing service Showing Time. So Zillow's Showing Time acquisition invited regulators under the hood, and there has been industry pushback tied to perceptions that iBuyers are inflating market prices for their own benefit so that there could be an external force triggering pause, right? So if you come to think about it, if I was Zillow and I have to put up with all this drama, right? Like there are other players out there. There's Opendoor, OfferPad, and Redfin, and they're only going after Zillow because of what they're doing, because I happen to be the biggest player in the market. I don't know. I might want to reconsider it. Like, is it really worth of my time to have the regulators breathing down my neck and trying to tell me what to do or not? Maybe this is something for me to reconsider. But once again, the article doesn't really give you much details. It still gives you a lot of maybes. But then as you move into the next article right here, now we're fast forwarding all the way to November 8th. And this is the article where you will truly start finding out what's going on. So we're talking about October 18th. That's when the first article was released, or at least the one that I came across with, all the way to November 8th. So a couple of weeks had to lapse in order for you to truly get the full depiction, right? So here, Zillow offers are arguably the most controversial business they have operated, right? And then as you're scrolling down over the past 3 years, we already know that they have been in the business for since 2018. The model of Zillow offers relied on the so-called iBuyer model. The company would make instant offer on houses, fix them up and flip them for a profit. The catch, heavy lifting in price estimation will be done by AI, thus reducing the cost of labor. However, estimating price, it's a peculiar task. As Zillow found out soon, they used to work with two main predictions, current value and the value after 6 months. But they soon realized that predicting housing prices was not going to be a simple task, right? And just to give you insight as to how they would do the prediction, right? So you have the low initiative estimate and then the high initial estimate. So on the low 6-month prediction, if you get a low initial estimate, homeowners will not likely to accept the offer. But then if you give them a high estimate, the company should not make an offer as they're taking risk of overpaying. And then on the high 6 months prediction, on the low initial estimate, homeowners will not accept the offer. Even if they do, the profit margin might not be worth it. But then if they have a high initial estimate, the company still should not make an offer, because if they do, that means they're overpaying. So just reading about it just makes things like blah. Like, okay, so what are you saying, that you're giving them the offer or you're not giving them the offer? What's really going on, right? So, and it's very clear here, operating in such an environment is not like knife juggling. You need to get it right. Every mistake hurts and it can eventually bleed you dry. And by details, they're talking about everything that's happening in the real estate market. I mean, math is very straightforward. It's either black or white. You have many ways to arriving to the same result all the time. But the real estate market doesn't always happen to be that way because it is very localized. I mean, how do you build into an AI formula the fact that there was a pandemic that was happening? How did you predict with a math formula that there's going to be labor shortage, that there was going to be a stimulus, that there were going to be a bunch of people working from home, that there's going to be a lot of demand because the Fed decided to lower the rates? Like, how do you really factor in? And even if you manage to factor all of those details into a mathematical formula, there's still things that cannot be included in there because, once again, real estate is very localized. Just to give you an example. So I recently did a cash out refi with a national lender. And the reason why I did that is because I believe at the time is that they had more bandwidth and, I didn't have to physically be present in Alabama and all of that stuff. So what they ended up doing is, because they're so large, they wanted to streamline everything. So sometimes when you're trying to streamline everything, it doesn't necessarily you get the most efficient task done at the local level. You streamline it at a national level. So what they ended up doing is that they ended up sending 2 different appraisals for 2 units that were on the same building. So I have 2 condos in 1 building in Alabama. And, you will think that it will make sense to send just 1 appraiser and just appraise both apartments, right? So the apartments were identically the same, but instead the company found to be more efficient to send 2 people independently on different days just to do the appraisal of the apartment. So once again, the apartment looks the same, right? So one person could have been easily sent out there and it would have done 1 appraisal and that would just, easily just skim through, the surface of the other unit just to realize that they were identically the same. But that didn't happen. They send out 2 different people, right? So when I got the appraisals back, I found that one of the appraisals came back higher than the other one. And then I called the lender and I asked, why? I don't understand. They are the same. Why should one be higher than the other? I want to get the cash out refi for the same amount for both units. But there was no way for me to argue the appraisal. It is what it is, right? And so when you put yourself in the situation of the appraiser, you will understand that sometimes things change depending on the person that is doing the appraisal. Yes, AI is great, technology is great, but when it comes to think about it, you're going to realize that streamlining a people business is not that simple, right? Because the variables are very difficult to blend in. Because in this case, let's assume what they end up doing was they sent out one appraiser that was just doing national appraisals. They came in and they were sent out from one state to the other. And all they did was just to, base everything on a formula and then on historical data, yada, yada. And that's how I went up with this appraisal, right? With the lower one. But then for the other unit, what they end up doing was sending someone who was local, someone that perhaps grew around the corner of that neighborhood and it's pretty familiar. But not only that, it's also proud of the area because they grew up in it, because this person really knows the ins and outs. And it ended up emotionally appraising the unit at a much higher value. Just simple elements like that. You cannot put that into a formula. And I'm thinking that that's probably what happened. Yeah, you can streamline all you want, but hey, there are minor little details that you cannot sometimes include in a AI formula right here to give you the right prediction, because every area, every house has a different story. And just to prove you how difficult it is to get it right using AI and fully eliminating the human component of it, let's say, the fact that homeowners accepted only 5% of Zillow's offer speak to the company's lack of ability to understand the market and adjust to new conditions, okay? So once again, it is not a cookie cutter business. You cannot just simply streamline it just because, right? There's a local component, there's an emotional component, there's a human component that comes to real estate. Interesting, right? If you think so, make sure you hit the like button right here so you can help this episode rant and help others like you who are looking for information of this kind. So now moving along to the CNN article. Zillow's home buying debacle shows how hard it is to use AI to value real estate. Now we're finally getting the answer on November 9, 2021, right? So here, in February, Zillow appears so confident in its ability to use artificial intelligence to estimate the value of homes that it announced a new option for certain homes, a so-called Sestimate. If you don't know what Sestimate is, it's basically this feature right here. So here we are in Orlando. Let's just pick whatever house from the list. So let's pick this house right here. And let's just scroll all the way down to see if we can find a Sestimate. For all I know, they might have removed it already. So the Sestimate feature is here. Estimated market value. This is the Sestimate. So it is an estimate by Zillow using AI that gives you a range of how much a property might be worth. So in this case, this unit right here and this address is estimated to be worth somewhere between $226,000 and $258,000, and it's based on historical prices. And once again, based on what we have read so far, a projection as to what the property might be worth within the next 6 months or so. So that's what a Sestimate is. Okay. And once again, as we scroll down the article, the move was an exciting advancement, and it was intended to streamline the process for homeowners considering selling to Zillow as part of its home flipping business. And the decision was announced last week that, marking a stunning defeat for Zillow, the real estate listing company took a $304 million inventory write-down in the third quarter, which is blamed on having recently purchased for prices that are higher than it thinks it can sell them. The company saw a stock plunge and is now plans to cut 2,000 jobs or 25% of its staff, right? So now, once again, why are they taking a loss? Why are they writing down their inventory? Is it really because the houses are not worth what they claim to be? Or is it mainly a formula issue or an AI issue that they, didn't predict accurately and they were accidentally overpaying for properties? So we'll find out. So the follow from this business venture doesn't just point to the challenges in buying and selling homes for profit. However, it also highlights how hard it is to use AI to make expensive real world decisions, particularly in an ever changing market that can be hard to predict months or even weeks out, and with prices that can be based as much on feel as on clear data points. Zillow CEO and co-founder Rich Barton explained the shuttering of Zillow offers by citing unpredictability in forecasting home prices that far exceeds what the company has expected. The Sestimate facts you provided and comparable home nearbys are used to calculate an estimated sales price, Zillow explained. After that estimate, the page explains Zillow conducts an in-person evaluation of a property, back to my example of an appraisal, right? Whether the person had local knowledge or no local knowledge whatsoever, determines the amount it deems necessary for repairs before it could resell the house, and then makes a final offer. Zillow has bought tens of thousands of homes since the launch of Zillow Offers, but has sold many fewer than it snapped up, according to its quarterly results. It purchased 27,000 homes from April 2018 through September 21 and sold nearly 17,000 of them. And finally, we got to the golden nugget right here. You have to dig and find out more. The challenge we face in Zillow Offers was the ability to accurately forecast the future price of inventory 3 to 6 months out in a market where they were larger and more rapid changes in home values than ever before. Indeed, since Zillow entered the home flipping business in 2018, real estate markets have changed in wildly unpredictable ways. The pandemic led to a temporary housing market freeze, followed by a supply and demand imbalance that caused an unprecedented rise in home prices. And this complicated the company's decision to include this estimate, which Zillow points out is not an appraisal, but a computer-generated estimate of the value of the home today, given the available data. But again, data versus public perception. Even if you call it a estimate, most people are already relying on that as if that was written, like this is the facts. This is what Zillow's saying that my house is worth. Give me my money or I won't sell the house to you. And then when the seller hits, the market or when the buyers are going to check out the prices, they're like, nope. You know what? I think this is far off. I'm not willing to pay for this. And you wind up with, a bunch of inventory in your queue, just like it just happened with Zillow, right? So artificial intelligence can look up far more information far more quickly than a single human could when considering a fair price for a home, weighting factors like comparable home sales in an area, how many people are looking in a specific neighborhood, and so on. And still, you can have a real estate agent look at a house and in 1 second pick out one critical factor of the valuation that just doesn't exist, and as one as in zeros in any databases. Okay, so once again, real estate relies heavily on localized knowledge. And there's more, a key part of Zillow, right? So the estimate has been a key part of Zillow's brand since the company first launched its website in 2006. The term is featured, once again, prominently on millions of Zillow home listings, is trademarked by the company, and it's mentioned 61 times in its IPO paperwork. 3 times a week, we create more than 500,000 unique valuations model, build the top 3.2 terabytes of data to generate current estimates on more than 70 million US homes. Okay, that's a lot of data. But yet, though the company points out that this estimate is not a home appraisal, the feature accuracy has been called into question over the years. For example, it became the subject of a lawsuit brought by homeowners in 2017, and that lawsuit was later dismissed. So Zillow has been spending years improving their estimate. But it seems that that's still not enough, right? Because estimating the price of a house is actually an art, it's not a science. It's one thing to build a model on a website that's often reasonably accurate, and it's another to then try to use that model in the real world to make very costly bets and do it at a scale, right? There are many unquantifiable aspects of putting a price tag of a home, such as the value of living in the same neighborhood you grew up in or down the street from your parents. So now we know what really happened to Zillow, but what does it mean for you and the real estate market prices? So let's find out. So we have another article right here. Zillow sells 2,000 homes and dismantling its house flipping business right here, right? So the company reached a deal with Pretium Partners, a New York City-based investment firm, and it has agreed to buy Zillow homes across the 20 U.S. markets and plans to rent them out, according to people familiar with the matter. The digital real estate company said it intends to sell roughly 9,800 homes it owns, plus another 8,200 it has been in the process of buying. The company expects to lose between 5 and 7% in these sales. Okay? 5 and 7%, they're expected to lose that. Now, in the transaction with Pretium, Zillow received market price for the properties. Okay, market price. And this is the point what I want to really bring your focus. Yes, the company is expecting to lose money, right? However, it doesn't mean that the real estate market is going downhill. Why? Because the reason why Zillow it's losing money on the properties it held is because of a miscalculation. They used the technology to forecast prices, and that forecasting was not accurate. And because they were getting inaccurate information, they were not making the right bids. They were not bidding the right prices, and it caused them to overpay for some of the properties. Okay. Now you have a company like Pretium Partners, who I'm sure has a great team doing all the appraisals for them and evaluating based on localized knowledge, now they're saying, okay, this is what our analysis is showing that the properties are worth. We're paying you market price. We're paying what the properties are truly worth today. And this is what we're giving you. And when Zillow compared those numbers, meaning the offer versus the pricing that they paid originally, they realized that they were going to be at a loss. Okay. So I want you to get this clear. The fact that they are losing 5 to 7% on these sales doesn't mean that the market is depreciating 5 to 7%. Okay. I want you to get that clear. And I don't want you to panic and worry about the property that you just bought. What does it mean for me? And my house going to be underwater? No, it just simply means that Zillow just messed up in their calculations and they overpay. It is a costly mistake. And that's why you're watching this video, because you want to learn, you want to understand the why as to what's happening so that you don't make any crazy decisions. You don't go by any random estimate like you will see right here without using the knowledge of your local appraiser that's going to give you the right pricing, whether you're planning on selling or buying a property. Okay. And just to prove my point that there's nothing wrong with the market and also to make a joke on Zillow, right? Right after this article right here that I just showed you, I got another one that came out on November 10, informing that their competitors, Open Door, OfferPad, they're ramping up their business and they reported new heights of revenue. Okay, so that's a joke on Zillow. Zillow didn't get it right. Their competitors, apparently, they seem to get it right. Okay? So once again, what happened? Zillow crashed because they try to automate, they try to streamline everything that involved the human component out of it. They try to remove the human component out of it, only to realize that they actually needed the human component of it to get the accuracy. And because of that, they were actually getting the wrong calculations, they were getting the wrong pricing, and that's why they were overpaying for the houses. Does it mean that the housing market is going to crash? Not from what I see here. Again, I don't have a magic ball that can predict the future, but based on what we're seeing here, this is nothing more than just not having the right localized knowledge. They were a big national company that they try to streamline everything, not understanding the local aspects of everything. And that's why they needed to sell all those houses, because if not, then would have lost a lot more money. And now that you have access to all of this information, tell me, what was one of your biggest fear before you learn about all the details that I share with you today? Did you have any concerns at all? What about the information that you just got out of this video? Was any of that expected from you, or were you taken completely by surprise? Let me know what you think in the comments down below. And while I still have you here, do not forget to check this episode right here. That's going to help you complement everything you just learned today. Until then, bye-bye.